Assalamualaikum dan selamat pagi brothers and sisters. Thank you so much for tuning in to IIUM your campus radio. I'm Najwa Nordin and this is our 10th episode of Financial Fit Stop. Today we are going to dive into a very hot topic, which is buy now, cry later, youth and debt management. Joining me is Madam Nirmala M. Supramaniam. She is the manager of the Financial Education Department at the Credit Counselling and Debt Management Agency, AKPK. She is also a registered financial planner, RFP, and has been with AKPK since 2009, initially serving as a credit counsellor to assist financially distressed applicants. Good morning, madam.
Good morning.
Welcome to IMFM.
Thank you for having me.
Yeah, we are also delightful to have you. And now, madam, to set the scene, 877 youth were declared bankrupt last year, and this is mostly due to personal loans and also buy now pay later BNPL transactions have surged to over 9 billion ringgit Malaysia. What are the biggest drivers of youth debt in Malaysia today, and what recent trends should we actually pay attention to, especially around the BNPL and also personal loans?
All right. If you look at the bankruptcy rates, definitely one of the main reasons for bankruptcy, the loans are personal loans lah.
Yes.
So we do see that followed, and we could say that a lot of people are taking personal loans, especially when it's an easy access, and the repayment is normally obligations are lesser, so hence why the tendency to drop to it is higher.
Yes.
But now when we see buy now pay later is totally a new market and it's growing very rapidly with I think over 9.3 billion ringgit in the first half of 2025 itself in terms of usage, with across roughly about 102.6 million transactions. And when we look at the research that says, right, we do see 70 to 73% of them who are using buy now pay later are from the young and lower income household, which means those who are under RM 5,000 per month. Those who are earning below 5,000 per month. So we do see that the tendency to use buy now pay later comes more from this group of people. And we do see the trend is rapidly increasing because it's widely provided, widely given,
Yes.
and quite a simple approving process, I would say. So it is rapidly growing at the moment,
Especially because it is being offered or embedded in the famous e-commerce platforms.
Yes, correct.
So do you think that actually contributes to the increase?
I guess
Yes.
sometimes when it's there and it's very convenient, it's just one press, one click and stuff like that. Definitely, the easier it is, the easier it makes us fall into debt. At
Yes.
times, even without us realizing, we may not even realize like, hey, the payment method is on installment and not one-time payment. So we have to really be very focused when we are purchasing stuff.
Yes.
Never purchase stuff online when you're in a rush. When sometimes some people do it when they're driving or when they're commuting, which you may not be able to pay attention to the fine prints there or to the terms and condition. So that's also, I would say, doing things very impulsive, and that could also lead to this kind of high usage.
And to warn, this BNPL in short term, it could give benefits, right, to those using the facilities, but in the long term effects, what do you think about that?
If you look any kind of loan, there is a good and there is a bad thing to it, right?
Yes.
But what we are afraid of this is more of the habit, because they give you, it is easily accessible, and the repayment are very low in terms of, sometimes you only pay 10 ringgit per month and stuff like that for small things. So then we would say, like, what's wrong, then I could, some people also had the thought of, it's okay to take the buy now pay later and so that I can have the cash in hand and I'm still paying back. And so at least I have a longer holding power of my cash, and I can use that for other things.
Yes.
Yeah, it's fine, but once it becomes a habit, then every small amount that you accumulate, and you will start taking up various different loans. And when you start taking up various different loans, that small repayment is going to added on,
add
is
up.
going to become a huge amount too. So it's the habit that we are creating, that everything also I'm going to buy on installment. And if that habit sticks with us, eventually it's going to get us in trouble. So if we want to inculcate the habit of paying by cash for most of the things, rather than every other thing I want to pay by loan or by installments, then it's already creating a wrong signal or wrong habit within ourselves. So we must always be mindful that if I take a loan, there is a purpose to it. It's
I
not
see.
just because it's there and it's convenient, so I take it.
So it really depends on the habits of our own habits, right?
Yeah, we don't want
This-
to inculcate this kind of habits that everything also I can buy on installment, to the extent that we have seen people using buy now pay later to buy food, to buy
Yes.
one meal, and then you're paying over 3 times. So I think those are creating a wrong signal to yourself. So if you have the choice of going for something else that you can pay by cash, then we should opt for that.
Yes.
Yep.
And also to avoid the snowballing of
Yes, correct.
our debt, right?
Yeah, I would say snowballing is the right word.
Yeah. So before we get into the details of debt threats after this, let us take a short break and come back to IIUM-FM, your campus radio. Welcome back, brothers and sisters, to IIUM-FM, your campus radio. I'm Najwa, your host for the Financial Fit Stop show this morning. And this is our 10th episode with the topic of Buy Now, Cry Later, Youth and Debt Management. And we still have the manager of the Financial Education Department at AKPK, Madam Nirmala Supramaniam. So, Madam, many youth now, they sign up the contract first without really understanding the contract. They understand, or maybe when it comes, when the bad things comes, when they really experience the consequences of not really understanding the contract, it might be too late then. So what are the top 3 contract traps that youths must know before they sign up for example, the personal financing, credit cards, or even a BNPL or any loans?
Okay, I think one of it is definitely the hidden costs and fees. So at times like for buy now pay later, most of it appears interest free, right? So they will say, okay, you can pay this amount in 3 months time, interest free. But then did you see the actual full fees of it comparatively to if you pay by cash? Is there a difference to that? And also if you don't pay, what are the costs that could imply? If you, let's say you happen to default, you wouldn't know, or you delay. So is there any late charges, or is there any pay? And also sometimes we have to also be watchful for processing fees. Is there any administration fees for these loans? Because at times, sometimes the late charges, the late default payment fees could be very high. So they got to be watchful for that. And when we look at personal loans, you don't find personal loans that are interest free. Most of the personal loans come with interest, but sometimes we do not know the actual effective rate, because we may see this is many years ago, few years ago, but now they have changed the personal loans rate to more of reducing balance. So but you got to also see and calculate whether this is the actual rate that they because effective rate and actual rates are different. So actual rate, effective rate calculates with the year, the tenure that we are going to pay, the amount and everything. So it's always a little higher. So we've got to be very watchful. So, and credit cards also, you also have annual membership fees. You have other fees, government service tax fees. So you have other fees that comes with it that you are not aware of. So one of it is definitely the hidden costs and fees. And the other one is that we also should be mindful about the minimum payment deception. This is especially in credit cards. So we must know that credit cards will ask you, okay, let's say you use 1,000 ringgit, and then they'll say, okay, you just have to pay a minimum of 5%. But that's just the minimum. They never mention the maximum. So if you are aware of it, you would know that you can pay anything above the minimum. You can pay anything above, and every ringgit extra that you pay is going to reduce your outstanding balance. And every outstanding balance that you reduce, the interest is calculated on the outstanding balance, so you will reduce the interest as well. So credit card doesn't state a maximum amount. So if you use 1,000, you pay 1,000, you're not going to pay any interest. But if you use 1,000, you just pay the minimum that they require, then yeah, most likely you will be continued paying interest. So if you understand these terms, you can actually save up a lot of money. And also you must be very careful in terms of, at times these contracts, they allow you to withdraw cash or take off cash. And when you take off cash out of these loans, is it going to be very expensive? What are the cash interest rates that they charge? So we also got to look into that. And most importantly, I would say it's also one of it is some of these contracts, especially like credit cards or BNPL, they might auto renewal. Like, okay, after you finish these terms, it just automatically continues until you have to tell them to put a stop to it. So at times we've got to also read, is it set by default on an automatic renewal on terms like that. So important thing whenever it's just too much to read at times, right?
Yes.
So I think most important thing is look at, okay, what is the loan sum that you have taken? What is the interest rate that you're going to pay? What is the installments that you're going to pay? How long exactly? How many months exactly you're going to pay? And then if you default, what are the charges? Okay, if you default, if you pay extra, is there going to be any penalty? Because sometimes doing early settlement can also relate to penalty charges. So you also want to see whether is there any penalty. And if you do early settlement, when can they give you a discount? Like after how many years? Not immediately. So you got to, just these are the important points that you got to look out for, and then see on that. Yeah.
And for those especially youth, when they have multiple commitments like renting house, and then they also need to pay for their for example PTPTN or any other education loan, and also their phone installments, and sometimes also BNPL if they have used the facility. So what is a practical method to calculate a safe debt limit and also avoid sliding into a chronic rollover debt?
Yeah. So coming to this, definitely like we talked earlier, everybody has got commitments, and sometimes when we want to take, we want to know whether it's this loan is something that I should take or should not, or what can I do to prevent in terms. So one of the main thing that we need to see is the purpose of taking this loan. Okay. Why do we take this commitment? Why do we take? So for example, we did talk about good debt and bad debt earlier. So when I take a loan that is going to help me generate income, for example, let's say we go back to the BNPL. Let's say I buy an oven on installment with BNPL because I am already doing a business. I'm already selling cookies, and I want to increase my sales. I want to increase my production. I need a bigger oven, so I buy an oven using the installment. Yeah, because I'm going to earn from it. So this is called a productive debt. So I'm taking this debt in order to actually earn or upgrade my sales, or even probably like maybe has a photographer, he needs to upgrade his equipments on photography so that he can earn more. So he goes for buy now pay later on this. So yeah, this is productive use. So you're doing this to earn an income. It's kind of like a small investment, right? And you'll be able to pay, or like loans, like that's why we say like property loans are normally productive loan. And when we talk about education loan, it is productive provided the student graduates and the student completes his studies. Because in order, why you are studying is, of course, you want to land a better job, you want to land a better position, you have knowledge for better other kind of experience, right? So because of that, we consider that as a productive loan as well.
Okay.
But we want them to avoid committing and using this loan for lifestyle. For example, going for a holiday. You see your friends all jumping on holiday, and then, hey, everybody is going for a holiday and I can't go. And the fear of missing out, FOMO comes
FOMO.
in, right? And then they say, hey, don't worry, you can buy the ticket on installment, you can buy this, why worry, come back and pay. Fine, yeah. But when now itself you don't have the cash to put for all this, how are you going to pay for it when you come back?
Yes.
So we've got to ensure that we're not taking these loans for lifestyle experiences. And so that is the upfront itself. We see, okay, why am I taking this loan, right? And then the main thing after I know, okay, I need this loan is important, then I've got to, of course, calculate my affordability, which is very important. We use the debt to service ratio or debt to income ratio, where what we always recommend people is not to go over 40% of your monthly income, meaning that all the repayments that you pay, for example, you say paying for loan, this one we are just calling it for loan. So let's say I'm paying for my PTPTN, I'm paying for my maybe hire purchase, and then I'm paying for some BNPL. So the monthly repayment for all of this should not exceed 40% of our income. Okay, but if you ask me, how do you calculate this? It's very simple. You just have to take up all your monthly repayment for loans, and divide it over your net income, and times 100, you would know how many percentage goes out. And if you can't remember it, just look up in the net for debt to service ratio calculators, DSR calculators. So this is to ensure that your income, you're not over committing to any kind of loans. And but if you are earning anything below 3,005, 40% is a bit too high also. So you should be at least 30% and below. Because if I were to take 2,000 and I take 40%, that's about 800 ringgit. And if 800 ringgit you used to pay for debt, you only have 1,002 to survive, which you haven't paid your rent, you haven't paid your food, you haven't paid, which is not going to be enough. So you also got to see the income level, but in terms of taking in consideration of your rent, your this thing, so your monthly commitments for all of this ideally should still be below 50%, so that you will have 10% for savings and at least 50% or 40% for your living expenses, as in your food and everything. So we just have to manage. That's why sometimes when we take up too much of this buy now pay later without us realizing, every month on a fixed basis there's something going out which you really cannot afford at the moment. So we've got to work out. It still comes in back into your debt to service ratio calculation.
Okay, so that's a very crucial point about understanding. The first one is understanding what are we signing up for, and understanding the purpose of taking the loan, and also analyzing whether the loan is productive or not, and also not to take any loan more than ideally 40% of our salary or income level, not more than 40%.
Not more than 40%.
Yes, and brothers and sisters, we will discuss more about the policies and also solutions regarding youth debt after this break, only on IIUM-FM, your campus radio. Thank you for coming back to IIUM-FM, your campus radio, and this is the Financial Fit Stop Show, and we are on the 10th episode. Still with me, Najwa Nordin, discussing about the Buy Now, Cry Later Youth and Debt Management with Madam Nirmala M. Supramaniam from the Household Financial Education Department, AKPK, or Agency Counselling dan Pengurusan Kredit. Now, Madam, from a policy perspective, you're looking from the policy perspective, what is Malaysia doing differently now to reduce the risk of youth accumulating the unsustainable debt, especially via BNPL and other non-bank credit?
Okay, they have realized that this is something that we have to watch out for. It is not a problem yet, But if we do not manage or regulate it, it might, head to a bigger problem. So what has happened is actually the Consumer Credit Act has been established, has been tabled in Parliament and has been approved. And with that, there is an establishment of the Consumer Credit Oversight Board called CCOB. Major milestones on this lah. So what will happen is the CCOB now will regulate all credit products and services that are not from the banks. Yeah, so the non financial institution credit products and services, which of course includes the buy now pay later. And what they would do, they will regulate them to require clearer disclosure of terms and mandatory reporting. So now, like if you were to take any other loans from the financial institution, there is this credit data report that we do see, like CCRIS report.
Yes.
Central Credit Reference Information System, where any kind of loans that you have taken is there, and the record is there from the financial institution. So this kind of loans are not there. The danger of it is when you do not have everything documented or recorded, you may even forget, or you cannot even track your own self, and you are not aware of how much of exposure you have actually exposed yourself to. So these are the things that they want to bring, is also bringing them into the credit report. So once everything is in your credit report, I think everybody will be very concerned about maintaining, and so we'll be more aware and more cautious about it. Like if at home you want to reduce weight and you don't have a weighing scale, you're not going to reduce the weight, right?
Yes.
So hence something like that. So and as I mentioned earlier, a lot of these users are from lower income and young users. So hence why I think the credit rating report is very important. So it will actually, you have to ensure that everybody has to be very aware, and they'll be aware that they have to mention. So it's not going to be like, oh, I just take and nobody knows, and I can just go on taking. So that's the thing. And the policy on this, we call this policy document on personal financing. Currently on the personal loans and all from the banks are also focusing a lot on responsible lending standards. So banks are also encouraged and required, they're actually required to have full transparency of the loan. So hence why the documents have it, but when we read it, we probably don't understand it. But as a borrower, you can ask questions from the bank officer, and you can ask them, and they are to provide you full transparency of the agreement of the note. So ask. So at times it's good to also be aware and also ask about what you're signing on to. So we do have these policies coming in place, and of course now, like recently, I think we also heard that because personal loan is a problem, and so moving forward, they are going to bring in a policy that anyone who takes in 100,000 loan and above for personal loan are required to go through a mandatory education first. So we do want to make things like a prerequisite. So it's not about telling the guy not to take a loan, not at all. We are not doing that at all. But it's more about the guy should be aware about what he's taking. And I'm going to get myself committed to something big, and I should know, okay, if I don't pay, what will be taken, what are the actions, and if I'm paying, how much am I actually paying, and can I really afford it? So the affordability calculator and all are required for us to actually give him.
And the Credit Counselling and Debt Management Agency, AKPK's Debt Management Program, DMP, has also have been helping freeze the legal action and so restructure loans. How does this counselling or education and debt management program give support to debtors, especially the youth?
Okay, so for AKPK, one of our core services is actually providing financial advisory, the credit counselling and the debt management program. So when we talk about financial advisory, so these are for people who think they have problem, or may even not know they have a problem, or don't have a problem. It's fine. So anyone can actually come in to seek for financial advisory. So in terms of how to manage their money, or are they on track, or do they have to, or they or are there signs that they have to watch out for, or are they over indebted and they really need help? So yeah, they could come in for financial advisory. And for those who know that debt is one of the major things that they're facing, they can't even repay. So some signs for a person to know whether I'm highly indebted or not is, one, to do the debt to service ratio, do the calculation. So if you see anything between more than 60% of your income is going for debt repayment, then something is definitely wrong, and you really have to seek, because if more than 60% of your income is going for debt repayment, you will have very little to manage your expenses, and that's where your cash flow is tight and everything. So that's one of the indicators to know. Of course, the other indicators is basically people who are just rolling. So they take one debt to settle another, and take another to settle another. So it just it just keeps going. So these are some signs when someone knows, and if they start using borrowed money to buy necessities, so even to buy basic rice or basic groceries, right, you're already using debt and you have to cover. So these are signs that, hey, something is wrong with the finances. So here the financial advisor can help, and if they see, oh, these people has highly indebted, so we will advise for the debt management program. So what we do in the debt management program is, we would negotiate with the financer to get a restructured repayment plan which is affordable by the borrower and acceptable by the financer. So we have to find this, we are like a mediator, finding a win-win situation between both parties. And if, let's say, we will put them in a program, and they would be paying monthly once the restructured program is approved. So they'll be paying monthly to AKPK, and AKPK will disperse this amount to all the financiers. We are not taking over the loan. The loans are still with the financial institution, but we will be like a mediator, get the program, okay, they are paying, so we monitor. And while they are in the program, while they are in the debt management program, yeah, that's where the banks will hold on to the whatever legal action that has been taken. They will give a moratorium to that. But let's say if this guy joins the program and he doesn't pay for 3 consecutive months, then we will also terminate the debt management program, and he will go back to the bank and follow their terms of repayment. So the borrower also has to be a very disciplined and really wants to prioritize on, improving, coming out of the. So we have a lot of success cases of people who have actually come out too. So it's all about, that it comes with a lot of sacrifice.
Yes.
Yeah.
And it actually goes back to the habit of the borrower themselves,
Yes.
that you mentioned just now. If the borrower still did not pay their loan for like 3 consecutive times, the program, the DMP will also be terminated.
Yes, correct.
And if we can go back to the question just now before this, the question about the policy, under CCOB, do they have any like credit scoring, especially to get the numbers or to get the reportings for our loan from the non-regulated
So
financing?
that's where they're coming in to regulate. At
I
present,
see.
we do not have. So that
Okay.
is where they're coming in to regulate, to see how we can get all this reporting. Because CCOB will be regulating all the non-financial institutions, lenders moving forward. So most likely by 2027, we should be seeing more implementations, because now it's still under the process of drafting, planning, and moving on. So most likely maybe by 2027, we should be seeing a lot of implementations of it.
Okay, and the policy document on personal financing issued by Bank Negara Malaysia, I think it could also give a very huge impact, especially to how the younger generations now, how they look at their debt management, because they are being educated, right, on on the loan that they are going to take on. So what do you think about the impact
Yeah, I
on
mean,
the future?
education is important, and it's also this has been on for a long time, like the responsible lenders thing by the banks is there for a long time, but it's also about sometimes we don't pay attention to the details. So any my advice to any borrowers, any young Malaysians, you want to take any kind of loan, do some research about it too. Like, how long is the term? Like I asked you all the earlier questions,
Yes.
you got to seek also. And let's say you, for example, you want to do something. Let's say you want to start a business, you want that. Then do your proper search on what kind of funds they are available for you. Don't just jump on one that you see is the easiest to get. Probably there are others that could be way much more cheaper for you and way much more things. So do proper research first, and everything I would say now is very simple because you can just ask any of the search
Yes.
engines and AI search engines, and they come up with a lot of information. And so you got to do this before you make a financial decision, not just make financial decision because hey, the person came in, it seems so easy, there's somebody doing it for me, that kind of thing. If we may miss out the best deals of it too, because there are deals and there are some websites that give you comparison of loans also. Like there are some websites that you can go in and say, hey, if I want to buy a house, I'm taking a housing loan for this year. Then they show you from all the banks what is the comparison of it, what are the rates that you think, what is the best suited for you also, right? So you got to do the research too. Yeah.
Then I also agree on the right now we have so much platforms that we can use to help us make best comparison and also make an informed decision on the loan that we are going to take on. So we'll be taking a short break before our last slot with Madam Nirmala. Stay tuned with us at IIUM FM, your campus radio. Welcome back to Financial Fit Stop at IIUM FM, your campus radio. And now we are on episode 10 with me, Najwa Nordin, your host, with the topic on Buy Now, Cry Later, Youth and Debt Management. And this is our last session with with Madam Nirmala Supramaniam from the Household Financial Education Department at AKPK. And now, Madam, as we have discussed about spending habits, we have also discussed about debt threats, about the safeguards now being introduced by Bank Negara Malaysia and other agencies. What is the single most important mindset shift that young Malaysians need to make today to manage their debt responsibly and to also protect their future financial well-being?
I think most importantly is not something that we don't know. We all know is always think about the future. I mean, we have a lot of saying that say, hey, we do not know how long we are going to be here. You only live once, YOLO, and stuff like that, right? But things do happen. Like if you see how fast the year passed, like it was just the beginning of 2025 and it's already coming to the end of 2025. So time is moving very fast, and we need to think about, okay, how am I going to manage things in another 5 years, or where do I see my finances? That it's okay to have short-term we say instant gratifications, instant enjoyment, but it's also important to see where do you see yourself in 5 years now. Where do you see your finances? How do you see it? We have to think far, and not. When I say think far, also you got to be careful that sometimes they think far. It's like, oh, I'm going to get the money then. I might as well spend it now, even if I've not got it now yet. Okay, so I think for future, not that kind, but it's more of like start investing. Actually, what's very important for the youth is actually start to invest, because this is the only tool that will help you grow and keep your money for the future. So you have to have this bucket. These envelopes, we call it. So, okay, this is for my long term. So I will allocate a little bit for my long term. And this is for my short term gratifications. And also it goes back to planning. Yeah, it goes back to planning. But sometimes it's so easy to plan to do it, to draw it up, to do the budget is so easy. But when it comes to actually following it or executing it, that's where your habits jump in, and how do you control what you want. So something that's very important is actually understanding what's your weaknesses and admitting it. So we always go with this 4A thing. We say acknowledge what is the problem. So we've got to analyze and see, why is my weakness? What do I know? I have allocated my budget, but still, when it comes to things, example, I tend to shop online a lot. You realize that, okay? Then you must go back and see, when do you actually shop online? So during what kind of emotions you are. Or when I'm bored, I take the phone and then I shop. So now the thing is, when you're bored, you take the phone. So you got the thing now, okay, when you're bored, you got to change that habit of taking the phone. Because if you take the phone, you're going to buy something. So you got to change the action to that emotion.
Okay.
So this is where you analyze yourself and acknowledge what is the habit problem here. Only when you do this, you're going to change the spending, right? So acknowledging there is a problem is the key thing. Okay, it's nothing wrong. Every one of us have got our weaknesses. Every one of us has got our issues when it comes to finances, right? Then you analyze. So you acknowledge, okay, this is the problem. Now I got to analyze. So I write down everything. Okay, how much I'm spending online per month on this, So I see. So seeing makes you worried because now you're aware, right? Don't think on the head only. Don't just think, it's in my head, everything I know. No.
Yes.
You will not realize the consequences of it. So analyze and then take action on it. So the third A, act on it. So you have to do this. So make some changes. So okay, like for example, I need to save some money. So don't put drastic actions like, okay, I'm not going to eat outside at all. I'm going to start cooking at home, and then I go grocery, buy things. I'm only going to cook for one day. After that, I'm going to go back to square one. So don't do drastic actions that you yourself cannot follow. Go with very mild ones. Okay, obviously I cannot stop eating outside, right? So instead of 5 days, maybe I'll reduce 1 day. That 1 day I would take it at home. The rest of the 4 days might be outside. So now I have this 1 day meal that I have saved. Or another way of looking at it is, sometimes you sacrifice something during your meal. Okay, let's say every time you take a meal, you have a coffee, you have this, or you have some other drinks. And sometimes the cost of drinks is very high compared to the meal itself. So I will omit the drinks. Drinking plain water is eventually much more better for your health. More healthy. And it's also healthier for your pocket.
Yes.
So I would say that, okay, I omit this, I will have my meal. So that few ringgit, you say, apa lah, it's just only a few ringgit, or how much can I save? No, but a ringgit or a 2 ringgit, 3 ringgit a day that you save from that drinks, in 5 days, if let's say it's 3 ringgit, 5 days, 15 ringgit.
Yes.
Right? And if I take 15 ringgit 1 week, if 4 weeks, that's already about 15, 30, that's already about 90, 120, sorry. It's already about 120, 90, I think, right? So, and that is actually a savings. So we always think about savings as big amount. So start small, but identify these things. I'm not going to give you tips of, okay, save 500. No, go back, acknowledge what's the problem, analyze it, and then take small actions. Small wins will give you that big win as well.
Start small but consistent.
Yes, that word I wanted to come to, you pointed it out rightly. Consistency is the key to it. Do not give up. It's not going to change overnight. Your habits are not going to change overnight. It's going to take months to change.
Yes.
But don't give up on it. Yeah. And the last A I was about to say is AKPK. So, So if you do need financial advisory, do you need this thing, you can actually browse our website and seek us for financial advice.
Okay, so that's the 4 A's that we get from Madam Nirmala. The first one is acknowledge the problem, know our weaknesses, and the second one is analyze our problem, to visualize, right, our problems, to know where can we actually fix, and the third one is action, act on it. We can start small, but the keyword is consistent, right? And the last one is AKPK. It just fit right with the acronym, AAAA.
Yeah.
All right, and that's it from Madam Nirmala. Thank you so much, Madam Nirmala. Much appreciation from us at
Thank you for
IMFM.
having me. Thank
Yep.
you.
And thank you also to our listeners for staying until the end of our show. And don't forget to follow our Instagram, check out our TikTok, and subscribe to our YouTube channel for more insightful talks just like the one that we have today. And stay tuned for the next segment, which is Get Grooving with DJ Janani. Until next time, I'm Najwa Nordin, only at IIUM FM, your campus radio.